As we're going to be coming back to Moynihan in just a second, we are settling at day's lows. In fact, it's worse than when I last reported. The Dow Jones Industrial looks like it's settling at about 320 to the downside. There you have all the indexes, 318.24 for the Dow. The S&P well off that 1,800 mark by about 10 points, down about 38 solid points. That's a 2% loss on the S&P. NASDAQ taking it even harder, 2.15% loss. And again, those Russell 2000 small and mid-sized caps almost 2.5% off. Let's break it down with our all-star panel. We have Yudi Chang, Ace Investment Strategist, Chief Trader. Scott Wren, Wells Fargo Senior Equity Strategist, with the sectors he says you should overweight even with this downturn. And Chris Gersh is in the pits of the CME. Chris, let's start with you. What are you hearing from the traders? Are we in the midst of a correction?
We are in the midst of a correction, as indicated by the volume right behind me. It has been an intense close. We are seeing this S&P futures continue to sell off after the equity close in New York. And like you said, 2.5% in the Russell. It was up 40% last year. We're seeing the Russell index as well sell off later in the hour.
Chris, is the word going out from the floor, from the brokerage desks to clients saying, hey, you got to take money off the table right now?
Exactly, Dave. You hit on it right there. The brokerage desk, as seen, and those market on close orders, are those brokers on those brokers desks really saying, you know, we should take a little off the table right now. We had an imbalance to the sell side of over 1.5 billion shares on the NYSE. You're seeing that carry over to the S&P pit right behind me. Excuse me, it's so loud. But yes, a sell-off correction definitely came through this week.
And before we go to Yudi, I'm going to stay with you one more time, Chris, on this question about what it's trading into. We saw the losses getting deeper as we ended the trading day. Does it look like that into the futures?
On the futures side, we are continuing to come off. We are on the low of the sessions right now on the futures side, so indicating a poor open again on Monday.
Okay, stay with us, Chris. Yudi, I want to go to you because you've been our beacon of hope. You've been a bull all along. Does this make you any less of one?
Well, I think on an intermediate term basis, I'm still a bull. On a short term basis, though, I definitely could feel it. I feel there's more coming. I think even prior to China setting off the sell-off 2 days ago, if you look prior to that, I think buyers have turned reluctant. We just don't see last year the so-called buying on dips. And we hit the so-called perfect storm where China started the war off by having this weaker than expected manufacturing data, now getting the Latin America debt and currency concerns, and followed by the fact that next week, don't forget, there's rumor that FOMC may do further tapering. That's the worst of the world.
Yeah,
and the fact that
if there's this kind of continuing downturn in the markets, one would think that that would make them a little skittish to do that. But Scott Wren, let me talk about industrials. It was industrials like Boeing, like GE, like Caterpillar, like 3M. They're the ones that took it hardest today. Does that make you a little reluctant? Because I know you were betting in industrials before.
It absolutely does not, David. And what we're telling our clients who have way too much cash and are way underinvested in stocks is they need to be chomping at the bit here. I hope this does correct a little bit more. We could maybe even see 1,700 in the S&P 500, but that is a total opportunity to put sideline cash to work. I think industrials, technology, the consumer discretionary sector, all the probably, the worst performing sectors in a pullback like this. You wish it happened a little bit slower, but, we had a big down day today. We're only 3% off of the record high or so. This is purely an opportunity for retail investors who are way underinvested to buy stocks.
But, Scott, wouldn't you advise at least a little waiting period to see how this turns out? Maybe another couple of days. Look, if you think the stocks are going to go to the upside, going to continue throughout 2014, then you're not going to be hurt too much if you wait 2 or 3 more days to get in, right?
No, I think so, David, because really, like I said, the way the market feels to me is we're definitely going to have at least a few more days downside, but I don't think we're going to have an extreme amount of downside. You mentioned the news out of China. You mentioned the EM currencies. These are not trends that just started in the last couple of weeks. Emerging market currencies started losing value against the dollar in mid-2011. common. You know, the markets, the stock markets are 44% behind, underperformed the S&P 500 over the last 2 years. I mean, none of this news is new, and that's what investors need to realize. The fundamentals here in the States, we're not going to grow fast, but we're going to grow at a dependable rate. 2.5%, something like that. We're going to have low inflation. You need to be in there buying stocks on these pullbacks.
By the way, speaking of emerging markets, we have the former finance minister of Argentina coming up. They had to devalue their currency yesterday. We'll talk to him about that. Chris, I want to go back to the floor of the CME and you. Russell 2000, they were hit harder than any other index today, the small and mid-sized caps. Are we going to see a continuation of that?
I think you're going to see a continued risk-off position, as these traders have clearly indicated at the close. The risk-off, so those smaller mid-cap companies are no longer as attractive. You're going to see a flow into the higher dividend. And to your last guess, if you believe there's a 1,700 forecast on the S&P 500. You know, you got to tell your clients to wait. 1,700, that's a 6% pullback.
That's
investors,
extreme. You got to leg in
for them to swallow.
Hold on. Go ahead, Scott.
It is not for retail investors.
What's that, Scott?
That's retail investors. Retail investors can't get in and out on 100-point moves in the S&P 500 and can't wait for the exact bottom. They have to leg in. They have to leg out. You cannot, if you're a retail investor who's way underinvested in stocks, you cannot sit there and wait for the absolute bottom and then jump in with the full amount that you have on the sidelines.
Understood,
It just doesn't work
Yudi,
that
hold
way
on.
in the
I want
retail
Yudi
world.
in on this conversation, too. Yudi, at least Monday, don't you think, considering that we saw a lot of selling at the end of the day, according to Chris, we're seeing it in the futures, don't you think it's likely Monday's going to be a bad day, too?
Yeah, I think so. I think it's going to be a couple of bad days prior to the FOMC. I actually more agree with Chris. The fact that, yeah, maybe long term, maybe eventually go back up, but you never know that, and nothing's guaranteed, right? Like, nobody picked out back in 2008 the market was going to drop 50%. So you still have to be careful with part of your portfolio. So I actually agree. You sort of can't just go in there and try to catch a falling stagger. You at least have to let it fall, let it start to making a bottom before you get in. I actually agree. On the overall basis, I like this correction. I want to wait. I think it's a buying opportunity eventually, but not today and definitely not Monday yet. I want to see a stabilization before I get into it.
Scott, it's hard to find a silver lining in what happened today, but Procter & Gamble was up. We should mention they had good earnings. People are selling things. Of course, Apple is selling a record number of iPhones. Do you go to those consumer stocks where people are buying what these companies are selling?
David, if I thought we were going to have a 20% correction, we'd be in staples, healthcare, utilities. I don't think that's going to happen. We don't want to get defensive. We want to be on the offensive. So those are not the kind of stocks I'd be looking to buy here. I'd be looking to buy the ones that were hit hardest because they're most sensitive to the global economic situation.
Wow. Yudi, I'm interested that you're into Chevron. Why are you liking energy stocks just as China is beginning to slow down? Doesn't that mean it's going to be a more of a hit for energy stocks?
Yeah, I do. But don't forget, I think some of it has already been factored into the energy group. If you look at the top 10 S&P groups, energy appeared to be actually the cheapest, believe it or not. And the fact that the extracting technology has been very efficient is hurting the energy stock a little bit. But by the same token, I think that is going to start to give them a little bit more profit as far as profit margin is concerned. That's why I like to buy the dips on the energy stocks.
Chris, what do you see happening worldwide? Do you think that the market was just too optimistic about world growth, that in fact they were betting on a kind of growth that we're not beginning to see?
I think worldwide what you saw is the froth really taming down this last month. Expectations across the world have been hitting their margins or slightly below. As far as we are concerned on the trading floor, we're looking to have relative relationship trades. So on the energy side, we have that natural gas. Us traders are trading with our gloves and our hats. Very cold. It's been bought up these last 2 months. So shorting natural gas, if you're looking to get into the energy sector, and longing the crude contract, if we are at a depression level, you should use that as a one product. I wouldn't go long here, crude itself. I think natural gas comes to meet at the mean reversion inversion trade here on the futures side.
All right. Well, we don't know what's going to happen on Monday, but I can bet that these three guys are going to be doing a lot of work over the weekend trying to prepare for what happens on Monday. Good discussion, guys. Thank you very much. Yudi Chang, Scott Wren, have a great weekend. We appreciate it. I know you're going to be working hard.
Thank you,
Chris,
David.
we're going to check back with you in a couple
You
of
bet.
minutes when the S&P futures close. Thank you. Well, Bank of America.